Hey everyone, Chris Haddon, Jason Balin, co-founders of hardmoneybankers.com and REI360.net, here with the REI360 show. Check us out any social media, hashtag the REI360 show. Okay, it's tax season, and tax week, and tax day coming up, so we are talking about taxes. In the world of real estate, as investors and agents and entrepreneurs in general, we're in a unique position. We don't have the same tax situation as a lot of the employee and W-2 world, and we need to plan properly for that.
Sure. Taxes obviously aren't the most sexy thing in the world. When you hear taxes, sometimes you cringe, but they're important. You know, I know everyone wants to go out and spend more time on making money and not paying the man, whatever their tax bracket is, but at the same time, it's important, and we've learned a lot of really cool key things over the last few years as being entrepreneurs, over the last 10 years, how to reduce your tax basis and things like that. Got a really good show for you ahead. Check it out right now.
Standard disclaimer, we're not CPAs or tax preparers or anything like that. Make sure to consult your tax professional with anything you hear here. That said, a lot of business owners and business people learn about this stuff from other business people, not from CPAs, and then you go verify it with your CPA.
That's right.
Right, because we're looking for different strategies. A lot of accountants and tax preparers tend to be a little bit stuck in their ways. So we learn this stuff from other people like us, like you're doing now, and then of course go verify it with your tax professional. That's our disclaimer.
That's right.
Cool. All right, so like I was saying, whether you've been in real estate or business on your own for a long time or a short time, you're in a very different spot compared to a lot of W-2 employees, which is most of the workforce. And if you're making a shift into that world, there's a lot of stuff that's going to be new and things that are going to be different and possibly even difficult. So we're going to knock through a couple quick things and then we're going to get into some more advanced things.
Yeah.
So basic stuff. I mean, as soon as possible, as soon as financially possible, start making your quarterly payments. Don't save it up till the end of the year and have it in your own personal account and try to pay what you owe in April. Make your quarterly deposits as soon as possible, whatever quarter that may be.
Yeah, I think that's one thing that a lot of entrepreneurs and real estate investors don't even realize.
A lot of people screw that.
Is you're not paying tax at the end of the year, you're projecting how much money you're going to make throughout the year, paying it quarterly, so at the end of the year you don't have one lump sum. And you know, there's always that question that our CPA asks at the end of the year is how much, you know, are you guys going to make more money next year? Are you guys going to make less? Yeah. So you can adjust accordingly. Hopefully you make more. The more you make, yeah, you got more taxes, but so be it. So make sure you at least have that in place for planning purposes.
Yeah, I don't want to go too much into that, but just a basic thing, just do it as soon as possible, please. Next, retirement account planning. Again, when you're in a salary situation, it's a very straightforward thing where X amount comes out of your paycheck every 2 weeks and goes to the 401k. It's done for people, it's very straightforward. When you're now in charge of that yourself, it becomes different, but there's pros and cons to it. One, the con is just that. You have to plan and you have to make your own payments. It's not going to be deducted from anywhere. So the other side of that is that as a self-employed person, as an agent or an investor, and without employees, you have a lot of retirement account options, one of them being the SEP IRA. And if you, depending on your setup, if you're organized correctly, you can contribute significantly more than you ever could to a 401k. So that's the pro side. I mean, there's good stuff that comes along with this as well. So that's just something general and basic that everyone needs to be focused on, and just get organized there as soon as possible.
Yeah, and the rule of thumb is there's a lot of different strategies related to it. If it's college savings plans, if it's IRA, 401k planning, if it comes off your top line of your taxes, those are little things that you can research and figure out. The solution is to figure out a way so it's kind of auto-populated, auto-paid, that it's just not hitting, this is going to get into the next topic in a second that we're talking about, but it's not hitting your personal checking account. Because as soon as it hits your personal checking account, it's probably not there. So it's probably going to disappear. So make sure, let's say, for instance, in Maryland, for instance, you can do a college savings plan for your kid, $2,500 a month or whatever, auto pay, just deduct the $209 a month, just let it come out, and then you don't have to deal with it. And all of a sudden, if you've heard about us talking related to snowballing, you start small with something, and over time it just kind of auto populates and just does it, auto pays, and it just goes and goes and goes, and then over time it does it. So set all that stuff, and that kind of leads us into our next topic related to setting up a business entity and an LLC and treating this as a business, right? And we're always firm believers that you kind of treat your main account as like your operating account, like your main
personal account.
Your main business account as your operating account, as like your life account, right? And at the same time, if something hits your operating account, then you usually use it to pay bills and things like
your
that.
Personal account.
Exactly, your personal account.
Life tends to eat up all that money.
But at the same time, if you don't want that to occur, take all that money and pay it. You can still pay it out of your business if that money's in there. You can pay it directly out of your business. Yeah, you'll still get picked up as income, but at least it's not in your household finance account.
So, okay, yeah, let's back up for a second, dive into the LLC thing, because that's an ongoing topic both in the agent world and in the investor world. And there's plenty of pros and cons. There's plenty of issues on both sides. So one, if you're doing any more than a couple deals a year, I would definitely recommend running your business through a business entity like an LLC for a few reasons. And again, this is not tax or legal advice. Go consult a proper professional for that. I'm talking about business planning and operations stuff because that's what we do. Like Jason said, if you're running your company finances, your business finances through your personal checking account, that's a mistake for a few reasons. One, like he mentioned, if it's in your personal checking account, life is going to eat it up. It's going to go to bills, it's going to be spent, it's going to be whatever. Keep a certain amount of your money out of your personal checking account. Very, very smart. When you have the organization of a business account, it's going to be used for business stuff. If you want to, for example, let me ask you this. You have a marketing expense and you want to pay X amount per month for marketing from your business account. That would feel very different psychologically than if that came out of your personal account.
Exactly.
You would be much less apt to spend money on a proper marketing budget if it was coming out of your personal checking account. That hurts. Nobody wants money coming out of your personal checking account. It feels very different in the business account.
Yeah, you flip a property. Let's say you make 20 or 30 grand. You take what you need out as income. You put that in your personal account, and the rest is operating expenses. It's very simple.
You leave yourself a budget.
But if you take that entire money out and you put it into your personal finances, chances are it's just going to get eaten up with daily activities. That's just the reality of it.
Or it'd be too painful to put it towards the right stuff, even if it's still
exactly. So it's smart.
Psychological benefits are huge.
Yeah. So it's smart just to kind of leave it there. And also, when you do have the business side set up, you can track appropriately. You can get proper software. It just makes a lot of sense to keep your business and your household finances completely separate.
But then the downside to having an LLC. And I went through this process with a friend of mine who's a successful agent, and it would make sense for her to have a business entity. As soon as she found out that having a business entity, it's not just written into your tax organizer that your CPA asked for. You're keeping a QuickBooks file and you're filing a corporate tax return. As soon as she heard that, she's like, I'm out. Can't do that. Like, no chance that's going to happen. So that's something that you have to get used to and get over. That it's not just another line item on your tax prep thing. It's a whole corporate tax return. Don't be scared off by that. It costs a few $100. I mean, you're talking very, very simple QuickBooks transactions. Some money comes in, you pay out some expenses, that's it. So don't get scared off by that. Although some people do. Yeah, be aware.
Agreed. Let's touch real quick on some strategies related to buy and hold real estate compared to just fee-based real estate, because a lot of our followers, a lot of our viewers are real estate investors. So the way we define kind of fee-based real estate investing compared to buy and hold is fee-based would be number one, like a wholesale deal. Pretty simply, make $5,000 in a wholesale deal. It gets treated as ordinary income, short-term capital gain, ordinary income. And that's it, right? It's just a fee for your services of wholesaling. And even flipping a property is similar to that because it's getting, for the most part, taxed on the exact same setup. It's just income.
It would be short-term capital gains at the same rate.
Exactly. So income, but there is ways that with buy and hold, rental properties, and some other ways.
They just making commission, like the
same thing with
the majority of the world of real estate is just fee money. Making fees for the services you're doing, and the fees can pay your bills. Cool. But then there's the other side.
Exactly. And the other side, and and obviously there's benefits of both sides, but is the buy and hold, the rental stuff. You own that property for over a year, your intentions of that property is a long-term investment. You get the depreciation side of things, you have the long-term capital gains, which obviously there's rumors of that number changing, but at the same time,
if
long-term
you sell eventually, over a year into the future.
But still, I mean, the difference between that long-term capital gain and a short-term capital gain on something like that is huge. The percentage that you're keeping in your pocket is significantly more. So that's all taken into consideration with some of these deals. And I mean, there's a lot of guys that we know, and us included, that we had a property that we thought was going to be a good flip property that ended up being a better rental property because, hey, we hold on to it for a longer period of time, and then we sell it. Even if we sell it for a smaller amount, at the end of the day, our net income ended up coming out to be more because the taxation on it was less.
True. Yeah, I mean, I think a good rule of thumb, and we've touched on this before, is that if you're in real estate, buy and hold real estate, right?
Yeah.
You're in the industry, you know the stuff. Don't focus only on the fee world of making an annual income. Really buy stuff that's going to create some longer term wealth. Hold assets, buy and hold assets. That's what the rich people do. I think that's what everyone else should do too.
Yeah, I mean, there's a understanding, and it's your responsibility to become kind of a black belt in finance, a black belt in taxes. I mean, don't just leave it to your CPA or your tax preparer to do this. Like, Chris and I have had to learn this kind of the hard way, and we've actually brought things to our CPA and said, I think we could actually try this strategy, or I think we could reincorporate and do it like this or that. And it's just kind of trial and error, and make sure you have the right people on your side to help you with that. And the best people to talk to are other entrepreneurs like yourselves that are getting to a point that they are making a lot of money and they want to save a lot of that money, and they want to put that towards the right things instead of just paying the man for it. And get in front of those guys, get in front of that sphere, and by doing so and networking with those right people, pay off dividends in the long term.
No doubt. So just to recap, our tax season episode, get the basics down first. Make sure you're doing your quarterly deposits. Make sure your retirement stuff is set up properly. Let's get the 101. Just knock that out. Then decide if an LLC or a business entity is right for you. I think for many, many people in the industry, it should be. And that's why we covered that stuff there. And if you're in real estate, just buy and hold real estate. We're in the industry. Let's just do it right. Don't have the super short-term focus of making fees. And I think everyone will do a lot better in the long term. Thanks, guys, for checking us out.
Cool.
All right, 360 show.
Till next time.
Live and direct.
Thanks to all
HQ.
Thanks to all the viewers that came in live and the ones that watch it after the fact. Until next time, take care.